Hey, good morning, everyone. Welcome to today's installment of Self-Directed IRA Saturday. This is a webinar that we host once a week. It's something that we kind of like to bring to the industry to provide some education and things like that. So we're really excited today. We actually have a very special treat for y'all. We've got Troy Eckard from Eckard Enterprises, actually the owner of Eckard Enterprises, on to talk to y'all about oil and gas investments and mineral rights today. So it's always such a treat to have Troy on. We really appreciate his knowledge and expertise, and he really is just an incredible resource when it comes to domestic oil and gas. He's got almost 4 decades of experience in this industry and understanding of this specific asset class. So with that being said, before we get started, for those of you who are not too familiar with Quest, whether this is your first time hearing about us, if you're not too sure what we do, we are a self-directed IRA custodian, right? Which basically means that we are enabling or helping clients to facilitate their retirement savings, their retirement bucket into more alternative assets, more private assets, things that are a bit more non-traditional, right? Such as oil and gas investments, real estate, things like that. So before we do get started, I just have to give a quick disclaimer. Quest does not provide any sort of tax, legal, investment, or deal structuring advice. We don't endorse any particular type of product or service, any asset or investment. So please bear that in mind as we go through. Certainly utilize this opportunity to learn, find some education, and hopefully we'll be able to hear from Troy and Derek from the Eckard team a little bit more about oil and gas. So let me pull this down. Troy, we'll go ahead and bring you up. There we go. Good morning. How are you doing today?
I'm doing great. Life is good.
Perfect. Well, thank you so much for taking the time to join us this morning, Troy. And I know we'll have Derek come up here in just a bit as well. But I'll go ahead and pull your slides up and just let you jump right into it.
Sounds good. I'll go ahead and do the presentation, give us plenty of time for questions and answers. And I think that's what the audience is all about. They want to know what's going on and how things are working, how oil and gas may be affecting either the inflation, recession, or the economy in general.
Absolutely. And to that point, everybody, with whatever questions y'all have throughout the presentation, please put them down in the comments and we'll get them to Troy towards the end once we start doing our Q&A session.
All right. As soon as you pull me up, I'll get cranking.
Okay. Let me make sure I've got the right one here.
All right. Sounds good. If you're ready, I'm ready.
Go for it.
Well, first off, good morning, everyone. I know that you've taken time out of your busy Saturday to come on board and find out what's going on in the self-directed IRA world, but more importantly, what's going on in the economy. I'm going to start with a precursor and tell you that I've been doing what I do since 1985. I've been involved in the U.S. oil and gas industry. But more importantly, I've been involved in what I consider to be a PhD education in entrepreneurship and business management, business oversight. Why do I say that? Well, since 1985, I have been representing self-made millionaires, entrepreneurs, business owners, families, and all types of high net worth and high income generating investors. What I've been able to do is create a collection of information across all different industries and spaces to be able to understand what makes the economy tick, why it moves the direction that it does. And I'm just going to give you an example before I get started and why oil and gas is absolutely the most paramount piece of information you need to know, understand, and follow. So one of my partners is like the 3rd largest semi-truck trailer manufacturer in the country. When I sit down and meet with him, it's very easy for me to learn what takes place in the transportation side that is a leading indicator where the economy is going. And what he'll basically say is that when I have about 18 months of advance orders, the economy is robust, the economy is booming, and all engines are firing at the same time. When I get below 90 days of inventory, meaning 90 days of orders being requested by buyers, we're not only in a recession, we're in a brick wall as far as the economy is going. About a year and a half, 2 years ago, he said, look, we've got about 14 months worth of orders, and that order is shrinking. We're getting less and less orders for new trucks. And I said, what does your forecast tell you after 50 years of running your business? He said, I think we're going to be down to less than 90 days in orders sometime in the next 12 to 14 months. The last time I talked to him, he said we're basically at 120 days. So we are headed to a really big slowdown. It is going to be something that's going to affect all asset classes across the board. But that's just one sample from the over 2,000 high net worth families and accredited investors that our firm represents today. So I preface my presentation by saying that because a lot of times Quest has great education coming on, but everybody has an angle. The angle is, hey, I'm the prettiest girl at the dance. Look at what I do for a living. Maybe you should invest with me. I'm going to try it from a different role. I'm going to tell you the value of oil and gas, the value of mineral rights, the value of what this U.S. oil and gas industry is doing, and you'll get to decide whether or not it's right for you and how that works. I will start off by saying at the very beginning that any investor in 2024 that does elect to become a partner or investor with our company, we will cover your fees for your self-directed IRA up to $500 this year if you decide to open an account. Now, why do I start off? Because I've known for years that some of the smartest, wealthiest investors are also very, very careful with how they spend their money. So as you listen to me, there's a $500 fee coverage for you if you decide to become a partner at the end of the year or before the end of the year. All right, let's talk about it. The first thing I say in any investment asset class is I'm more focused on the who. Who's managing my money? Who's behind the expertise? Are they really an expert? Do they really know how to lead and figure out where to go, where the arbitrage is in any investment class? And I think it always boils down to how long have you been doing it? What's your track record tell people about who you are, how successful you are? How transparent are you? Do you tell people all about you, or do you have these big gaps in your resume, big gaps in your career where 10 years ago you were selling cars, now you're a multifamily expert. 5 years ago you were a security guard at a warehouse, now all of a sudden you're an expert in cryptocurrency. And that's a bothersome problem for me because most of us listening today are probably north of 40, 45 years old. We've been through at least one or two cycles. For those of us like myself, I'll be 60 this year. I've been through about 6 cycles, and I can tell you there's been a whole lot of losses of capital for people giving advice that really don't have a clue what they're doing. We got to be very careful. So for the who, for Eckard, it's about Troy Eckard. Started in 1985, started off in an investment company, had my own firm for over 22 years, started my first oil company in 1995. Today, we manage and control over 7,000 producing oil and gas wells in this country. We have over $800 million of assets under management today, all directly owned by people like yourself with self-directed IRAs and regular investment accounts. We also believe in aligning our interests with yours. And the reason we say that is we buy the minerals, we buy the assets, we buy the interest before you ever become a partner. So that means we're fully engaged and fully on top of making sure that we have the same risk as you do. All right, let me advance this sucker. Okay, and by the way, just so everybody knows, every system on every Zoom seems to have a different set of keys. So my apologies if it's not real smooth. This is a different setup for me. All right, so basically when we look at this, oil and gas mineral rights, I think the one thing that most of us don't recognize is what is a mineral right. There's 3 rights in the United States. There's air rights, which are not attached to the surface. There's surface rights, everything attached to the surface. And then there's natural resources or mineral rights, everything below the surface. In this country, the majority of oil and gas being discovered today is in rural areas of America. There are literally hundreds of millions of acres that have oil and gas reserves underneath it. The fact is most of the individuals who own that are farmers and ranchers and rural property owners. So the actual cost of the land might be $1,500 to $5,000 an acre. It could be $7,000 an acre. But the mineral rights underneath it could be anywhere from $10,000 an acre upwards of $150,000 per acre, depending on where it's located and the estimate of value from the reserves of the ground. But you and I, unless we were born into a family that owned land in an area where geologically there's oil and gas, up until about 10 years ago, there was zero probability you and I could actually own mineral rights with producing oil and gas wells. Well, technology's changed all that, and I'll cover that here in just a second. All right. My voice is a little cracked today, so I apologize, but I've been fighting through a little bug, but it seems like it's holding up. So mineral rights are not only the natural resources below the ground. If you own mineral rights, you own 100% of all natural resources below the surface. It doesn't matter if it's precious metals, gold, silver, oil and gas, etc. You own it all. The key opportunity, though, is who's going to harvest it? Who's going to mine it? Who's going to drill the wells? So what I like about minerals, it's real estate. It's real property, titled and deeded. It is owned by you, everything below the ground, and is filed in the courthouse. What I also like is because of the way the industry works, any oil and gas company that decides to lease the minerals you and I own, in that leasing document, it says clearly they assume and take on all liabilities, all drilling, environmental, property taxes, capital gain, capital calls, holding costs, reclamation, location. we get a free ride as a mineral owner in what's called a royalty interest, meaning that we get a percentage of all future income without ever having to be exposed to one single dime of capital expenses or liability. Mineral rights are probably the most passive form of income you can have from any asset class. I challenge it against real estate, multifamily, self-storage. I challenge it because at the end of the day, we buy our minerals with a single acquisition, and I never pay a single dime for expenses or fees or liability ever for as long as I own those mineral rights, which is in perpetuity until I decide to sell them. You get 12 distributions a year every single month when they sell oil and gas on our minerals. They send us a check for our pro rata share of that royalty income. It's a very simple investment. At the end of the year, I get a 1099, says, here's how much you made in those 12 distributions. If I invest inside my self-directed IRA, my IRA is going to get a report of that income. It's going to grow tax-free. It's a very, very strong asset to hold one self-directed IRA. So one of the three things I look at in my own personal stool, my financial stool, is I like cash or liquidity. I have certain value and I have certain affinity for public assets, but I really, really like alternative assets because in my world, Troy's world, I like something I can see, touch, kick, or feel. I like real estate. I like oil and gas. I like mineral rights. I like things that I know, regardless of who's in the White House, there is a financial value that goes far beyond the political election, goes far beyond what the media is putting out. It's something that's going to be here forever because it is real estate. It is real. It is tangible. One thing nice about putting it in your self-directed IRA is because it has no cost, no expenses, it never deteriorates the value of your IRA because all you'll receive is income from the mineral rights and the oil and gas sold in those properties. Now, along the way, I want to share with you that most of you probably either have very little oil and gas in your portfolio or you're wondering how oil and gas is going to affect the economy today. Well, I'm going to show you in a few slides what inflation looks like with oil and gas, but I'm going to tell you along the path. This country's economy booms when oil and gas is inexpensive. It gets clobbered financially when oil and gas prices go higher. Why? It's what drives the economy. From the syringe a doctor uses, the latex gloves, the tires that we put on our cars, the asphalt, the electricity, utilities, every single thing that involves this economy across all industry sectors is directly related to the price of energy. So when we started to see a major rise in the price of oil in 2022 because of the Russian war with Ukraine, oil rose to $129 a barrel, natural gas skyrocketed. Those two commodities, which is 85 to 90% of all energy in the U.S., caused the economy to skyrocket in inflationary trends. That put a stop or a break on the economy. And you and I, as investors, should be paying attention whether or not you ever participate with Eckard. You should be looking at how energy affects every single one of those stocks that you own, real estate decisions that you're in, because at the end of the day, rising energy cost eats up profit. Rising energy cost makes the cost of capital rise. Rising energy costs are negative to most other asset classes. And so there's a balance like a seesaw. If you don't own oil and gas in your portfolio, you have nothing to balance the negative effect of rising commodity prices. So in the screen, what you see in front of you, everything in pink and light pink were oil and gas geological formations that were known to exist. They were there all the time. We drilled through them for the last 100 years. We drilled down to 5, 6, 10,000 feet below the surface. And we'd pass these enormously organically rich geological formations, but it was like drilling through wet concrete. So we knew the oil and gas was there. We knew it was large. It was huge in quantity. We knew it was very low risk to drill. We simply didn't have the technology to go in and develop those oil and gas reserves until about 15 years ago. About 15 years ago, we got really smart and decided instead of a single vertical well, let's go drill a horizontal well and go out maybe a mile or 2 miles horizontally. That horizontal well is like the equivalent of 200 or 300 vertical wells. So we exposed our opportunity to harvest the reserves by having more exposure to the formation itself. In addition to that, we realized the only way you get wet concrete, like a wet driveway with concrete to flow, you might want to jackhammer and create some cracks and a pathway for that water that's wet on that concrete to actually be able to flow. In our case, the way we do it is we frack with sand and water. We inject sand and water along that horizontal wellbore path. We crack that wet concrete and it frees all those gas and oil molecules, which is what we have done to create the shale play as it's known here in the U.S. That technology allowed us to do exactly what you see on your screen. This is today's Grand Canyon. The yellow arrows indicate different time deposits, meaning the lowest yellow arrow that's at the bottom could have been deposited 150 million years ago. All the dead plants and animals that were deposited in this canyon and then filled up with non-porous reservoir was trapped. We had a second, a third, a fourth. In West Texas, in the Permian Basin, there's as many as 20 different deposits that occurred over a 250 million year time frame. And as a result of that, the magma in the earth cooked it. It boiled it like a pot of rice, but it had nowhere to go because it was sealed by a non-porous formation above it. So one layer at a time, one geological period of time, over millions of years, we had these huge basins that were full of oil and gas. We knew it as an oil and gas industry. We had no idea how to recover it. So what do? We got smart. We said, look, let's go in. Let's drill a single vertical well. Let's turn the drill bit at a 45-degree angle. Let's drill out a mile or 2 miles horizontally. Let's create a very small footprint. Let's only have a 2 or 3 acre pad site. We don't need 100 wells tearing up the landscape. Let's go ahead and just drill one pad site. Let's use modern computers and technology. Let's exploit the reservoir that we know is there. Bingo, success is now what we have today. We now are the #1 oil and gas producer in the world as a result of technology, American ingenuity, and the fact that because of this technology, we now can recover billions of barrels of oil and trillions of cubic feet of gas that have always been here in the United States. We simply did not know the engineering methodology to recover it and produce it. Okay. What you're seeing there is just a typical 4 drilling rigs in the state of Oklahoma. The red arrows indicate how they drill them. They'll take one pad site. They'll drill to the north, the south. They'll go out a mile or 2 miles. And then what they do is they stack it. We like the idea that in any investment asset class, how do we minimize risk and maximize return? So each one of these buried Grand Canyons in about 12 different states in this country, they may have 1 or 2 or 20 different reservoirs. What we like to do is make sure that we get multiple opportunities for extracting oil and gas to give us the highest rate of return and the lowest amount of risk. On the right-hand side, you see a typical location once the wells are drilled. You might have 6, 8, 10, 20 different pump jacks producing different wells, all in different formations, going different directions, and that's what you see on the screen. This is a cutout from the state of Oklahoma showing all these little green lines. Each green line comprises 1 to 2 miles of horizontal drilling. So this is a huge area of horizontal drilling. 10 years ago, 15 years ago, each oil company drilled the initial well to give empirical proof the oil and gas existed. Now, I'm trying to keep this without being too technical. I'm just simply saying all the risk was taken out 15 years ago. All the exploration, I don't know if it's going to work or not. How far is the edge? When do we fall off a cliff? How much oil and gas can we produce? All that was done 15 years ago. Today, we're in the harvesting mode. Today, we know it's proven. We know it's there. Now, there's a shuffle going on inside the oil and gas industry, just like Exxon bought out Pioneer for $60 billion 90 days ago, just like Chevron bought out Hess for $57 billion. These major oil companies have already decided we have de-risked, meaning took the risk or the speculation of oil and gas being in place. We took that out of the equation about 10, 15 years ago. Today, what they're doing is saying we're harvesting. We're simply looking at how much oil and gas exists, how many reservoirs are stacked on top of each other, how much money does it take to recover, and how much oil and gas is in place. Now, the reason this is important from an economy standpoint, from a global economy, back in the oil embargo in the 1970s, back in the failed prices of 1997, again, the reaction in 2008 when we had $146 oil, the fact what we had in 2020 at COVID when Saudi Arabia and Russia colluded together to flood the oil market in the United States. What we've done is we've gone from a country that was running out of oil to now we're a country that is the #1 oil producer in the entire planet Earth. And so we have taken customers away from Russia, taken customers away from Saudi Arabia. So that has put them in a precarious situation, knowing that instead of being a consumer of Russian and Saudi oil, we're now not only consuming it, but we also are producing 13 million barrels out of the 21 million barrels that we consume as a country every day. We consume 40% more than we produce. This entire industry changed in the last decade and a half. I mean, it's like a brand new frontier, wide open for investors who are smart enough to recognize the low risk nature and the high potential value created from cash flow and asset value increase. All right. So when I think about the way these companies are drilling it, it's almost like manufacturing. One drilling rig, one pad site. They go down and go horizontal one direction. They stack it. It's called cube drilling. They may knock out 4, 5, 8 wells at a time. You and I are sitting back as the mineral owner saying, everything below the surface is ours. We hope you go drill it like a pin cushion. We hope you drill 30 or 40 wells, because all you're doing is adding another cash flowing asset for me. I can see it. I know it's there. It's real. I get cash every month. If you want to drill 5 more, I love it. I have no exposure or liability. All I'm really risking is quantity and commodity prices to determine how good my rate of return is. Not if I get a rate of return, but how good it is, because there's virtually no dry holes being drilled horizontally today. I keep pushing my right button to advance. I forget it's a click, so I'm sorry. I'm trying to make sure I move forward. All right, this is just a schematic, what it looks like from the side. And the truth of the matter is these companies have figured out very, very smartly how to go in and use triangulation and satellites and computers. It is probably one of the most modern industries out there today, using all this great technology to give us the chance to drill these wells accurately and improve every day the quality as well. So when you think about today, the oil and gas industry, it's not really exploration, it's more of exploitation. So the truth be known, in the last 4 years, everyone expected demand in this country to go down because of the green energy initiative and all the alternative energy. In fact, we've moved from about 19.5 million barrels a day that we consume daily 4.5, 5 years ago. Today, we're pushing 22 million barrels a day. We're up 3 million barrels a day. The entire premise that all the wind and solar and hydrogen, all these other alternative energies, we're going to put oil and gas, put it out of the marketplace, meaning it's no longer viable by 2050, is absolutely a fraud. It doesn't work. So then the question becomes, well, if oil and gas is going to be continually consumed and used and demand is going to go up, it means there is room for alternative energy. There is room for wind and solar. There is room for hydrogen. But the reality is 85 to 90% will always come from fossil fuels. Well, it is the only natural resource. Oil and gas, fossil fuels, the only natural resource on the planet. When you burn that barrel of oil or that molecule of gas today, it's never going to be on planet Earth again. Unlike other natural resources like precious metals, which are always here, they're just reconfigured. They're used for a different purpose. So if that's true and we have rising demand and depleting resources, that's economics 101, ladies and gentlemen. That is what you want. You want 100% consumption by the end user, which is human beings. We want to use oil and gas every day. And the fact is we're running out of it. That is a marketplace. That's an asset that I want to own and I want to control. All right. When we think about how it looks from just a practical standpoint, this is an actual pad site of one of the locations we own a lot of minerals under. And what happened is EOG came in and said, we're going to build this mini city. It's going to have a location to drill the wells. We're going to have 4 sections of land, almost 2,700 acres of land. And we're going to drill out in both directions 13 wells at a time. So we got 13 wells at $10 million plus per well. That's $130 to $150 million of drilling, all free to us, drilled at the same time across minerals that we own. The little schematic in the bottom shows you kind of what they did. Why is that relevant? Well, because activation, drilling wells on my minerals or your minerals, allows us to see cash flow, and it increases the value of those minerals, because now it's not just assumed to be productive. It's not assumed the oil and gas reserves there. Now it's the strongest asset declaration in oil and gas, which is proved producing flowing oil wells has the highest value. So the game plan in minerals is buy them under producing companies, under the best jockeys, those that have the best technique for extraction. Buy them where you know they're willing and capable of spending the kind of money necessary to develop it, and buy your minerals today, knowing the future is going to be another pad site with 10, 15, 20, 30 wells drilled that's going to be free to you as a mineral owner, nothing but income coming your direction. All right. I'll make this a little bit quicker because I know we're going to run out of time. In this case, these are 3 slides that have relevance, and I'll tell you why. Everything on the screen inside that dotted circle is what they assume that if you squeezed every single molecule of a dead plant and animal, organic material, out of the rock that we drill into, it'd be the entire thing inside that dotted circle. Everything in red where the yellow circle is what we've already produced to date, meaning the old vertical wells from 50, 60, 80 years ago, the wells that have been lined up until this presentation today. That's called cumulative production to date. That's how big it was. Then we had a scenario where we said, hey, horizontal drilling in these zones that we've known, these formations we've known that are there, well, now we want to start exploiting. So what did that do? That gave us a whole new area of development and economic value, and that's called proved reserves, which means that's the actual wells flowing today. Proved producing wells flowing. It's that little blue circle. Where we think we're going to end up very easily is going to be the next blue circle, which is 4, 5, 6 times larger than the proved reserves, and that's what they consider economically recoverable. So what did Exxon do? Exxon today bought out Pioneer because they said, we're buying based on what you have proved today. We think that's what's really down there. But the truth of the matter is they really believe it's not bigger than that. They really believe that it's going to be reserves out here to the light blue. So when you think about a mineral owner, if you and I went out and bought acres today, mineral acres today, anywhere from $13,000 to $18,000 per acre, we're kind of buying it based on that small blue circle. There's a little bit of market value given for the next blue circle you see in the yellow. There's really no value given for what you see in the next 2 circles. Keep in mind, 13, 14 years ago, everything on that screen that's in blue that's not red was considered uneconomical and could not be exploited. We did not have the technology to get it. So in a matter of 15 years, we went from almost running out to enormous amounts of reserves going forward. Now, we want to touch on the inflation factor. So my background was economics and finance. I'm an avid reader. I look at all kinds of different pushes and pulls across the economy, real estate, cost of capital, cost of debt, transportation. I look at industries. I look at employment factors. I look at how the banking community is doing, because it all affects oil and gas affects the economy. So they kind of go hand in foot together. When I look at the pattern over the last, 30 or 40 years, what I see is a pattern that's been very, very clear. It is that we have factors in the U.S. because of the U.S. dollar. The U.S. dollar works inversely to oil prices. Now, it used to be a much faster reaction. So if the dollar went up, oil prices went down. If oil prices went up, the dollar went down. It was very, very quick to react under those kind of scenarios. In the last 4 years, we've not had that nearly as distinct as in previous cycles. Why is that? We added about $5 trillion in stimulus. So we artificially supported the U.S. dollar. Everybody else wanted to buy the dollar because it was being supported by $5 trillion of stimulus. And that directly put the normal trading mechanism between the dollar's position and the price of crude oil, put it a little bit at bay. It's now moving very quickly back to a normal cycle because the stimulus money's been running out. But we look at things like supply and demand. Who needs to buy U.S. dollars in order to trade on the global stage? What kind of trading? Are we importing or exporting? How's that moving? Well, we were importing 18 million barrels a day of crude oil, right? Now we're only importing about maybe 8 million barrels a day because we're producing 5 million barrels a day from our own oil and gas here in the country. And that's causing some trade differential. So that affects the dollar. Of course, inflation and interest. And of course, is what people assume. What's the risk going forward? Are we assuming that we're going to have a safe economy or not? Well, in 2002, and these are important numbers to look at. In 2002, the U.S. dollar rose to an all-time high, okay? Crude oil prices dropped to 28.54, all right? And I believe that's supposed to be 117.25, not 177. 2008, the U.S. dollar plummeted to 73. Crude oil went to 146. You see the inverse? When dollar rose to high, oil collapsed to $28. When the dollar plummeted to 73, oil was at 146. The U.S. dollar today is about 115, a little over, got to 115 last year. Okay, oil went backwards from $129 a barrel in 2022 down to $67.50. What's happening is that the cycle is shortening. So the real question for you as an investor is, because it's going to affect your stocks, it's going to affect your bonds, it's going to affect your real estate, is where is the dollar at today? What does Troy think the dollar is going to do? I said for about a year now, when it went up to about 115, which I told my partners and my investors, the dollar is going to rise. I also said it's also going to collapse back down below 80 again, and it may take 24 months to do that. The effect of the stimulus was difficult for any economist to figure out. It was very difficult for me to figure out because I didn't quite understand how significant $5 trillion would change the entire macroeconomic scenario here in the country as well as globally. But we have reached the end of the road. We have used those stimulus dollars. The last bit of liquidity is being sucked up by failed ventures. Banks are needing liquidity to shore up their capital. Multifamily, real estate, self-storage, buy and flip homes, hard money lenders out there, they're all watching all these assets fall apart, and it's consuming and it's absorbing all the liquidity that was put in the market last year very, very rapidly. I believe we're on a downward tick of the dollar over the next 24 to 36 months, sub 90, possibly sub 80 on a dollar's value. The reverse of that is I fully expect oil to rebound. Rebound from where? We're at about $79 this morning, and it very clearly tells me we're moving back up to probably that $90, $95 range maybe by the end of this year, or at least by the middle of next year. The long-term view for me is we are very short of necessary supplies. The current economy, the way it is telling these oil and gas companies not to drill more wells. We're going to see a shortage of supply relative to today's numbers, and with that less than probably 24 to 36 months. So it's a great time to be in the oil and gas space if you directly own those assets. Let's talk about the things that are most important to you if you ever want to put energy inside your self-directed IRA. I want something that's going to make me money 24 hours a day, 7 days a week. I want an asset where I don't get a knock on the door or a certified mail saying, a storm hit my building, you got to replace the roof, your deductible is this, landscape costs are up, electricity. I don't want any bad news. I don't want anybody telling me I owe them money. I want assets that I can buy, and I want those assets to generate income. I want them to generate, if they can, money every single month. I want the rotation and the value of reinvesting that income as fast as I can. I want my life simple. So when I looked at minerals and really pushed my company that direction 7 years ago, I said there has got to be hundreds, if not thousands, of individual investors just like you. I want to take my portfolio. I want to make double-digit returns. I don't want headaches and risk. I don't want liability. I don't want bills. I don't want fees. I don't want to split my equity with some sponsor. I want to have thousands of wells making me lots of money, no matter what I'm doing, 24 hours a day, 7 days a week. And I want that done every single year for the next 25 to 75 years. Well, welcome to the world of buying minerals. So what we've done in the last 5 years, Eckard has put $800 million to work. We now own over 5,000 wells / employees working for us 24 hours a day, 7 days a week. We have zero liability, zero bills, zero capital exposure. It is probably the easiest, safest investment my group of 2,000 investors have within their entire portfolio. Last year alone, now we're only traditionally, as of this January, a month ago, we were 5 years since the start date of our plan. Last year alone, we sent out $55 million we distributed in 2023. We estimate $75 to $100 million being distributed this year in 2024, and we believe we'll be well over 7,000 wells with zero dry holes. So we look at the way we've done our business, and we have said, how do we align the advantage of oil and gas in a choppy economy? How do we align ourselves in an economy where it looks very clearly like possibly the value of the dollar is going to go backwards? How do we talk to investors out there who have never done anything in the energy space and say, it is safe to enter the water. It is safe to own minerals because you don't have the liability. It really is a passive income source like none other. All the money goes in. You don't have any money going out. It's the way investments are meant to be. Place your investment. Let the elements or the instruments of that asset class work for you. I like knowing I have Exxon and Chevron and Oxy. You name the top 10 or 20 largest oil companies in the United States. That's who has leased and is drilling and harvesting the oil and gas off the minerals that Eckard and our partners own. I don't know how to get any safer real estate investment than this. I don't know of a single other investment that has zero downside from the standpoint of capital exposure. All I know is I've got wells online that'll last 25 to probably some over the last 75 to 100 years. All right, here's the way it works. It's a repeatable income, last 25 to 75 years. It's all cash flow. This is what we're supposed to be doing. Enjoying time, measuring waves, counting waves coming in, sitting back, enjoying the prosperity of our livelihoods, the prosperity of our smart decisions. And we're doing it all with the idea that by owning mineral rights, we have all these wells producing, managed by billion-dollar oil companies. And I believe that is where we want to be in our investment life. I'm going to repeat two things. Number one, Eckard will cover the cost if you decide to open up a self-directed IRA account or do business with us up to $500 this year in 2024. We will cover that cost. Why do we do that? It's cheaper than caps and hats and swag and material and calendars. And it's what we want to sell you is we want to have you as a partner. We want to make it easy for you to make that decision. The second thing I want to tell you is there's no way in 45 minutes I can talk to you about oil and gas. I got 45 years of expertise. I'm a little under the weather. My voice is a little scratchy. But, man, I could tell you in half a day session the thousands of reasons that I believe owning oil and gas makes sense for any investor. And I believe what you really need to take from this is if you and I can own an asset that billion-dollar oil and gas companies, the largest oil companies in the world, are going out spending what has just been spent in the last 4 months, close to $200 billion has been spent by Exxon and Chevron and Oxy, buying minerals, buying assets, buying wells in the exact same place that Eckard is. There has to be a preponderance of common sense that says, what is going on Why am I not investing there? Should I invest there? And should I put my toe in the water, put 25 or 50,000, or should I sit back and say, if I do a linear T-bar, what does mineral ownership do for me? I think when you do a conclusion to that, there's only one thing that's left, and that is I should figure out how to become a partner with Eckard, how to own energy, and more importantly, I should figure out whether I invest with Eckard or not, how oil and gas can affect the rest of my assets in my asset class. All right, I'm done. If you guys want to leave that up, that's fine, but I think I did it without hacking and coughing. I'm sorry I'm under the weather. I was watching my voice here and scratch here.
Yeah, no worries at all. So we do have some questions here and a little bit of time for Q&A now, Derek and Troy.
Sure.
I'm going to go ahead and put these up as well, as we've got some questions already coming through. This first one here from Carlos: can you syndicate with other people that own self-directed IRAs? And I mean, certainly y'all can tack onto this too, but what Carlos is asking, right, is how can my self-directed IRA invest and indirectly own some mineral rights and produce some passive income?
I don't know if I interpret the question the same way as can you syndicate with other people. I think what he's saying, can he get 5 or 10 of his friends and they all invest under one single self-directed IRA is what I think he's saying. I think inside your self-directed IRA, you can be a participant in an LLC that owns minerals, but I don't think you can collectively put a bunch of self-directed IRA accounts under a single syndication. I think it's more complex than that. I think that's more of a legal question. What we've seen happen in the past, though, is we've seen a lot of partners that want to put in $1 million, and they'll say, hey, 5 of us will go put in 200,000 apiece. We'll create an LLC. That LLC buys into Eckard's portfolios. That happens a lot just because people want to have a collective aggregation. You don't have to do that. It's simple enough because all of our projects are not LLCs. They're not a special purpose vehicle. When you invest with us, it's a purchase sale agreement. You put in a dollar amount. That dollar amount owns a percentage of all the mineral acres in the portfolio. So you can put in 25, 50, you can put in $1 million in a self-directed IRA. You're going to own a percentage of every mineral tract that's in that portfolio. So you don't really have to syndicate it. You don't have to bundle it. You don't have to be part of an LLC.
Perfect. Okay, another question here from Colleen. Can get it up. Everyone looks at short-term projection. What is the long-term financial worth of the reserves in the ground?
It's a great question. I think the simple answer is, I never have claimed to be the smartest guy in the room. I just like to stand next to and follow the smartest guy in the room. So when you think about the long term and the short term was 13 years ago when none of the shale drilling was even economical. Long term, back in 2008 and 9, was how does this look after 5 years of production? Today, when I look at the long term, that message is clearly being defined by the fact Exxon and Chevron and Oxy just spent close to $150 billion buying out other major oil companies because they believe the reserves in the ground that they estimate to be in the ground today are a fraction of what they really believe those oil and gas reserves will produce by the time 100 years goes by. So I think the reserves in the ground, there's really 2 key elements to owning minerals. Number one is just cash on cash return. How much money am I making for how much money have I invested? If I put $1 million in, can I generate $100,000 to $200,000 a year in income? The answer is yes. That's great. That's great cash flow. But like a traditional real estate, if I buy a building for $1 million, it's going to be worth $1.5 million in 5 years. Well, our real estate, which is oil and gas mineral rights, is it going to be worth more than we pay for it? Now, I have a lot of engineers who will tell me, maybe, maybe not. It depends on how many wells they drill. I argue that by saying, when I take a look at today's technology and what we know today in recovery, it pales in comparison to what they thought they had 5 years ago. 5 years ago, they thought they had a 16-ounce Coke. Today, they think they have a 3-liter Coke. I'll bet you in 20 years, they think they have an entire truckload of oil and gas because the oil and gas fossil fuel material that was deposited 100 million years ago only have been placed in certain geological positions. So the only thing that changes value, really, the quantity is finite. There's only so many dinosaurs that died in one spot. But the value is finite relative to commodity prices. So the more you pay me, the more I can extract. I think the long term has a tremendous upside that is not even quantified in today's numbers.
So Troy, talk about things like inflation and just thinking about like where the economy's been going and with it being an election year. it's funny that I hear and see all the time from investing partners and other clients and even other groups that sometimes people are scared to start investing, or maybe they feel like they've missed the boat already. Would you think that right now is actually a good time or bad time to really start to get in oil and gas? Did people already miss the boat, or is it like a great area to kind of get into, just knowing that things would be on the uprise?
Well, I'm a pretty avid investor myself, Derek. I've been investing since I was a kid, and I've actually had a self-directed IRA since I was like 26 years old, like in 1991. Maybe I'm just a freak of nature, but I bought into self-directed IRAs a long time ago. And the answer for me is simply, I think crypto has run up to $52,000 a coin. I think that's mainly because of paranoia about the US dollar, et cetera. I think crypto's got a place. I'm not that big a fan of it. I think real estate, from talking to some of the very, very experienced, sophisticated real estate professionals I work with. I talked to one last night. I said, how's it looking? He said, I think the tsunami is bigger than any of us have measured. It's getting extremely bad, worse than what he told me 6 months ago. And this guy's the top of his class. In fact, he met with Jamie Dimon about 3 months ago. So the information is very relevant. So go back to your question. What's happening today in the market is most investors are like sheep. 5 years ago, the sheep were told, interest rates are low. You can't get money in the bank. You got to take risk. You need to be in all these real estate deals that are hopefully going to make money based on leverage and refinancing, et cetera, et cetera. So the reality of it is, I think that we had this false narrative that's been played out, and investors sit back on these podcasts, these mastermind groups, they're financial planners who are basically very uneducated. They said, what should I do? They shove the sheep in one direction, which is go get low cost money, invest in assets, and the whole game plan was buy it, increase the value, dump it. Well, that's like trying to get out of a theater when somebody hollers fire. You're not getting out the exit in time. Very few make it to safety. The reality today for oil and gas in this inflationary market, we do not have suppressed inflation. They artificially lowered inflation because it's a political year. The truth is we're probably running 10 to 15% inflation, if not higher, across most categories. So how does that bode for oil? Oil goes the same direction as inflation. Inflation is either driven by energy prices, oil prices go up, makes inflation go higher, or it is actually a victim of inflation. Oil was a victim of inflation initially. Now it's going to be the culprit. If you think about the CPI today, oil and gas, as it's risen from $67 a barrel December 1st to $79 today, what you're going to see is continuation of oil prices move up. It's going to cause further inflation, just like throwing gasoline on a fire. So if you're sitting with cash in the bank, or you're scared to death to make an investment, what you're really saying to yourself is, here's a fire escape, here's a ladder, here's a fire extinguisher, but I don't see enough smoke. So you're not grabbing, you're not taking action, you're not deploying capital today. Well, by the time the fire is evident in the window, your escape route's cut off. You can't get to that fire extinguisher. So prudent, smart investors are going to say, I got enough liquidity, I got a few dollars in the bank, but my money doesn't need to be worked in bad investments. It needs to be working in investments that clearly are taking the path of the economy, which is raging inflation, stagflation over the next 3 to 5 years. That, mark my words, take this recording, put it down, play it back in 3 years and go, raging stagflation is our pattern in the next 3 years. That's what Troy W. Eckard's telling you.
So, Colin,
Awesome.
I know from working at Quest, a lot of clients keep their cash just sitting and it's not invested. How much money does Quest, you think, at any point in time have of their clients' funds that's not invested?
You know, Derek, that's actually a really good question. I would say at any given time, it's probably somewhere around, maybe a couple hundred million.
A couple hundred million, 300, 400 million, something like that?
Somewhere around there. And honestly, what we see is, people will make that initial investment, right, in a real estate property or some kind of with an investment sponsor. And after that capital returns, a lot of times they'll just let it sit idle.
I learned and stuff that when I was working with you guys, one of the biggest problems it seemed like a lot of self-directed IRA investors had is they get annoyed and obnoxious with having to always fill out the direction of investments, the fair market values. You got the transaction fees and the annual fees, right? Or you have to go through the motion of setting up an account. And the only reason to bring all that up is, Troy, don't you guys cover all of that stuff? You guys take care of 100% of the investment paperwork. You do the fair market values for the clients, and you'll even cover up to a certain amount of fees.
Yeah, Derek, we do it. I'll tell you why we do. I'm just like your average Quest client. So I opened up my Quest account. I sold I sold everything out of the public market about 36 months ago. I had no confidence in the stock market. I sold out at about 35,000 on the Dow. It's at 38,000. I didn't give up anything, but I'm sitting in Quest right now in all cash because I'm too busy to figure out where to go with it. So I'm sitting there with cash and I haven't deployed the capital yet, right? So when I look at asking someone that's sitting out there to invest in a self-directed IRA, set up a self-directed IRA, I'm asking you to go really take on what's a pain in the neck. It's paperwork, it's time, it's delays, it's a mess, right? But once it's done, it's the best investment tool out there by using your retirement money through a self-directed IRA, specifically in minerals. So what our company has said is we got a whole staff set up that understands IRA, custodian work, fair market values. We have a machine automated to take care of all that on behalf of our investors. Why? I'm an accredited investor. I've made my money. I have money. I want to go have coffee. I don't want to sit on the phone for 2 hours trying to get a transfer. I don't want to look at somebody gouging me for $400 in the fee. So our company sees the cost of business is by covering that fee, having a well-trained staff, having people that know the process, help handhold and guide that investor through that self-directed IRA process is the right thing to do. And it's the most sensible thing to do because that is what we are designed as sponsors, is to make the investment so passive, not only in the investment side, but in the transaction side. So the answer is yes.
Yeah, and to each of your points as well. I mean, Eckard really does do a good job of kind of streamlining these things for our investors. So it's certainly appreciated to see. Okay, we do have some more questions coming through.
Okay.
And Troy, I know you spoke to this a bit already in talking about what you can get return-wise on an initial investment. Bob's question is, how long do you project for it to take to recover my initial investment of $100K?
So Bob, that was a great question, but I'm going to reset Bob's thinking about minerals. See, I don't want to get my money back. Well, I do, but eventually. But here's the thing. If I bought into a oil and gas well that I'm drilling, I want my money back because it only has a finite amount of oil and gas. So I'm looking, put $100,000 in, drill the well, I get my money back, take my tax write-off, and it may have 2 to 1, 3 to 1. In minerals, it's a little bit different. I want to know that I basically bought myself a rent house that has a tenant in it for the next 75 to 100 years that can't ever ask me for money, maybe put a new air conditioner, sheetrock. All of our financial models project cash flow of somewhere between 10 and 20% per annum every single year. Across 90 portfolios at this point, we're averaging over 15% cash from cash. So you can take 100 divided by 15, there's your answer. That's how long it's going to take. We have portfolios now that have already paid out in less than 3 years. We have portfolios paid out in less than 30 months. I want to say we're up to 25 or 30% of our portfolios are on track for paying out in less than 4 years. So we have set a model for 10+% return a year, but our results are indicating a good portion of our portfolios are paying out 100% in under 4 years. The reason I say that for Bob's benefit and those listeners is if I have a rent house and I have a tenant paying me rent, I'm making a rate of return on the equity I put in, and I've got some kind of form of debt typically where I'm trying to pay off that debt. This being an all cash investment and the wells that are drilled on my property having an economic life of 25 to 75 plus years, what I'm really looking at is what kind of rate of return can I get on the wells that were active or being drilled the day I bought it, okay? How many more bites at the apple am I going to get? Is there going to be more wells drilled in 5 years, 8 years, 10 years? Because the truth is, depending on the activation when these wells are drilled, it's going to either accelerate or just give you a rate of return based on the financial model projection. So I would just say, in my view, if I put $1 million into minerals, I would expect to get 100% return of that $1 million via cash flow in under 8 years. Typically, what we're seeing now, it's going to hit probably somewhere in that neighborhood of 6 years or less. Again, based on commodity prices and activation, that can be as short as 3 years, can be as long as 8 years, but I think that's a relatively safe answer.
Perfect. There are three more really good questions that I do want to get to. This one from Bill. When a brand new horizontal well is completed and it is online, what do you believe the average life expectancy for that well is?
Bill, it's a great question. I'll just give you the short answer, which is every well being drilled by these major oil companies, they're shooting for a 3 to 1 on their money. And right now in the engineering decline curve, they're looking for those wells to last 25 to 50 years. And the reason they do that is that they'll see this sharp decline in the first 4 years because like shaking up a 3-liter Coke. When they frack it, it's overpressured. But if you take a look at the cost of operations and you look at the normalization of that decline curve, we're looking at a lot of decline curves showing us 25 to 50 years on the average well. I think that's the wrong answer, though. I personally believe what we're seeing now in the industry, they're going back and re-stimulating, re-fracking, fracking in different parts of the horizontal wellbore they didn't frack the first time. I believe I've already got wells that have been online for over 20 years. I started drilling horizontally in the 1990s with the Barnett Shale here in Dallas-Fort Worth. I still have wells online, and they told me they wouldn't last 10 or 12 years. We're now at 25 years. So from a practical standpoint, an engineer will tell you 25 years average decline curve before it's uneconomical. I'm telling you, a lot of these wells will be around 50 to 100 years because the numbers are wrong.
Got it. This question from Rao, I want to expand on a little bit. I really like this, actually. And what Rao is referring to, the tax benefits that can potentially come from investing through a self-directed IRA, and where UBIT, or more specifically, unrelated debt-financed income tax, can come into play, really doesn't apply to y'all. And correct me if I'm wrong, because you're 100% investor capital, right? There's no debt in your investments.
Correct. Everything, all $800 million of minerals that we've acquired is all cash. There's no debt. We don't believe debt's the right place when you buy minerals. It's an asset that you get the greatest value by buying it with cash, non-leveraged, and the tax benefits inside of a self-directed IRA are not available. Why? There's a 15% depletion allowance. The IRS says if I bought it out of my regular account, you're depleting the reservoir like depreciating equipment. They allow 15% of my income. I don't have to pay federal income tax. Well, since I'm already getting the tax benefits inside my self-directed IRA, I'm not going to get that 15% because my assets are growing and the income I receive is growing tax-free until such time as I withdraw it out of my IRA. So if you bought it in your regular account, 15% of your income will not be taxed on the federal level. If you do it through your self-directed IRA, you're already getting that advantage by not paying taxes until you take a withdrawal. Derek, just always correct me if I misstate that, but I believe that stated correctly.
No, I was only going to make an additional comment on it. This is why I think we see so many people use the self-directed IRAs, because they don't have to worry about things such as UBIT, and it's easy for their CPA to go through stuff. And it's such a small amount of work for money that we already consider passive and out of sight, out of mind. You know, if you're not dealing with fees, if you're not dealing with paperwork, if you're not dealing with UBIT issues, and it's the best and easiest investment owning minerals in general. So.
Well, and I think the other thing I would add to that is I have so many investments and other things where I have K1s and I'm waiting for reports, waiting for fair market value. One of the other things about owning mineral rights in your self-directed IRA, we get the fair market values out long before they're due. We also have all of our 1099s and tax reporting pieces of information out, usually around January 31st is the deadline, right? We've normally knocked it out 2 or 3 weeks in advance. So because we do that kind of expedited reporting, we make all the investors who have self-directed IRAs who are invested in minerals with Eckard, we're like the first check off their box on got to gather tax information. Eckard's like done. Absolutely. We also have an app or a site for all of our partners called Eckard Insights. So you get all the information, you get uploaded your tax documents, you get uploaded all your deeds and titles. So in addition to just having a team that's available, we created an app. You can get on 24 hours a day, 7 days a week. Go, how's my minerals doing? Where's my check? Where's my statement? How's each individual track of minerals, and where's my tax information? It's all on that site. We spent about $3 million the last couple of years developing this app. We're the only person in the alternative asset space that's spent the money and the time to build an app like this, and we did it for one reason. That's what Troy would want. I want to know what I own. So I'm only offering things that I insist on and demand. If you're going to get my money, I expect you to do X, Y, and Z. So I did that for our company, for our investors, because you should have exactly what I want, which is the very best of information flow and service.
Awesome. Okay, so we've got a few minutes left here. I do really quick just want to run through some upcoming events and a few things about Quest as well, and we'll see if we've got some more time to get to questions after that, and then I can pull up Troy and Derek's information again for y'all to contact them with any remaining questions you have. So the first thing here, one thing that is incredibly important to Quest and really what we focus our business structure around is the education. So, I mean, you can see just from today how we like to bring education and knowledge to not only our client base, but the public in general, right? We host this event, Self-Directed Saturday, every week. We host a Tuesday event every week. And we have other socials and things. You can go watch our past recordings on our YouTube channel. You can check out articles on our website that talk about all of these alternative and private investments and all sorts of different things. So we really do pride ourselves on the education that we provide, and I really encourage you all to take advantage of that. The recording, for example, from this webinar will be posted on our YouTube channel just within a few minutes after today. So a few of the specific events that Quest does have coming up. This one is going to be focused on millennial investors and trying to educate more of the younger generation about alternative assets. So this is one that we're incredibly excited for. Whether you kind of fit into that category or not, maybe you have friends or children, right, that could really benefit from this. So I would really encourage y'all to share this with them. It's kind of going to be like a self-directed Saturday on steroids to an extent. It's going to be 3 hours long. We've got a few different panels that myself and some of the other IRA specialists, some of my colleagues will be moderating. So you can scan that QR code, check this out. And Rebecca Parker, who's our moderator today, is actually putting some links in here as well to our education and events page on our website. Okay, this one here is one that we just actually started marketing and released some information on. It's going to be our next in-office or in-person social that we're doing in Austin, Houston, and Dallas. The focus of this is veterans turned investors. So we're actually partnering with the Wounded Warriors Project to bring this to the forefront, provide some education, and hopefully teach the people that protect our country and have given their service. So that's something we're really looking forward to. Again, please share this with anybody. And if whether you fall into that category or not, right, feel free to come out, network with us, learn more about self-directed investments. And then the final one here, which is really the big event that Quest puts on, the Expo. This is something we've done, not necessarily by design, but it's kind of fallen every other year, about every 2 years. So the last one we had was in September of 2022. So this is going to be an incredible opportunity, whether you're a new investor, a seasoned real estate investor, to learn more about alternative assets, to network, to meet investment sponsors and vendors and all sorts of different people, right? So I highly encourage y'all to not only go scan that QR code, go to the Quest Expo website and learn more, but purchase your tickets today. We've only got so many VIP tickets left, and they're honestly right now selling like hotcakes. So we certainly want y'all to be able to take advantage where you can. Get the right education out of this and what you're looking to do. So this is going to cover all sorts of alternative assets, topics from real estate, single family, multifamily, oil and gas, mineral rights. We're going to do, I think we'll have probably some topics on AI and how that's affecting real estate. So some very exciting things there. And I believe that is about all that I have. If you've got some more questions for us, for me on the Quest side, scan that QR code. Rebecca has put some links down there for our events and education in the chat. Feel free to call us. Our phone number's there. I'm also going to share Eckard's information one more time where you can contact them with any other questions. And Troy, Derek, we're right at 1 o'clock now, but I just want to say we really appreciate y'all's time. Thank y'all so much for joining us today and being able to speak a little bit more about mineral rights.
Yeah, I'd like to make just one more comment, guys. And the biggest thing I always feel like, and this probably comes from my big self-directed IRA background, is first off, leverage the people at Quest and leverage the people at Eckard. You have people on here that are willing to hold your hand, cover your fees. Not only that, but dude, go through all the paperwork for you and just make it as easy as possible to get an investment done. All you need to do is send an email, make a call. And then I see a lot of people, I see Jimmy and Mike and Joanne and stuff. Send me an email and we can get all your questions answered, because I know we didn't get quite to everybody else's. But, Colin, thanks for honestly just having us on. We're excited to be at your guys' expo. We really, really are. We're actually one of your guys' top sponsors there. Sponsored every single one of your socials that are coming up as well. So Troy, anything, and then we'll see you guys next week.
No, I think I would leave the audience and those who come back and look at this video later. I'm going to leave you with 2 comments, which are very short. One, the economy is in a major disaster, whether you believe it or see it or not. If you're not taking proactive moves today to protect yourself going forward to the next 24 to 48 months, you're going to find yourself on the wrong end of the stick. And number 2, you have 1 or 2 choices when it comes to oil and gas. You can be an investor and own it, or you can be our customer. Either way, we're happy because we need somebody to buy all the oil and gas. I prefer to be both. I prefer to consume what I own and make sure that I own a lot of it. You guys have a great weekend. Thanks for listening to me. And Derek and Colin, thanks again for hosting it.
Troy, thanks for your insight and for both y'all's time. We really appreciate it.
You bet. Have a good weekend. Take care.
All right, everybody.